All right, give me 1 second, guys. I'm gonna get this organized. My head's bad today. All right, so this is gonna be my example of teaching the strategy for you guys. This is all live trades, anything. What do I get out of this? There you go. Okay, let me get out of that. Oop. I'll let you know when I'm starting. Okay. Let me make sure I got everything organized. I probably should have done this before. I don't have that long. But that's the bearish bullish. Okay, there you go. This is what I need up here. And then this is what I need up here. All right. So let me get started recording. This is going to be a YouTube short. I'm doing it as a stream because it's going to be easier this way for me. All right. And let me get up Top Step for myself. All right. So I'm going to explain on Top Step. I have one more thing I want quickly. Give me 1 second. Give me 1 second, guys. I'm just getting it working. Not that. Maybe it's on the other one. All right, here we go. So I've shown this several times, okay? So this is going to be my strategy. Let me go ahead and get started recording. So this is going to be my strategy. I am going to go in much as detail as I can in the next 30 minutes. If you want to learn the strategy for trading that I trade live on stream every single day, please watch, okay? This is the only explanation I'm going to give. It will be on a live stream. I'll also just convert the same exact thing into a YouTube video as well. I can't make the screen any bigger. I can't change any of the setup. I don't have another, change of setup. So if you have any questions, please ask. I will probably answer all the questions. So let me go through the whole prompt, the thing, and if there's any clarification, I'll answer at the end. Okay. But I did have people asking for this. I don't have time to edit a video right now. So let me go ahead and start with this. So the main thing that I'm going to mention, first of all, about anything that I mention in any of this strategy, okay, is when you are trading, okay, trading higher time frame, lower time frame, whatever time frame you're trading, whatever market you're trading, okay, you first of all need to recognize that what the higher time frame is. If you do not have a clear picture of what the higher time frame is, then we're not going to trade, okay? So when I'm looking at this specific chart that occurred on Friday, right? And if I'm looking at this structure right here, this gives me a clean idea of where the time frame and the trend is moving, right? And I will answer any chats, okay? Afterwards. But hello to everyone that does join in, all right? So when I'm seeing this is a clear idea of where the chart is moving. When I see this on the market on my higher time frame, if I'm trading for the day, this is not a clear idea of where the chart is moving. This is where you stay out of the market. Yes, I can zoom out and I can say, hey, this might be a higher time frame move, But when we're seeing this, and this is all I'm seeing for a long time, like maybe a period of 4 days if I'm scalping, I'm not going to be entering on the market, on this type of market, okay? So that's the first thing. Have a clear idea of where the market's going to move. So if I have a clear bearish downside bias, I'm only taking bearish trades, okay? Until it gives me a confirmation on that higher time frame that we're reversing. So how do you know if it's a trade to the downside versus a trade to the upside? So when I'm looking at this, I look at what's called unmitigated areas, or areas that have never been tapped again. So what I mean by that is when an area has been tapped, for example, right here, and we have a previous high right here, I need to see this area, whatever retest comes in this zone, at least come up to the 50% area, okay? To count as a full retest for me, for my specific strategy. If I do not see that, it's not giving me enough confirmation. So any movement that happens within this area right here, okay, is just noise. It doesn't matter. At the end of the day, none of this matters. So because of that, we need to see all this area right here is just confirmation. It's a bunch of liquidity being grabbed to the downside, okay? Continuing that move down. And you can see this happen over and over again. And once we continue that break, what do we have? We have the confirmation again. So you could either conclude that this is the confirmation or this is. And when we have that new confirmation down here, it's the same continuation. And all I'm looking for is some sort of liquidity to be bought on each of the same continuation, okay? You can see that this tap right here grabbed into the 50% of this area, which barely grabbed in the 50% of this area. And all of this is unmitigated. So this is all mitigated, which means it's all filled, okay? Everything else, this area was never filled until this point reached. So that's how you identify a trend, how you identify a market structure correctly. When people say highs and lows and highs, they don't explain this in this much detail. All those courses you're going to buy are pointless because they're going to explain, well, you have a high and a low. Oh, we have a high. Well, let's build another high, right? But it doesn't go into detail. When does a high actually matter? And a high only matters when it comes into discount. And what I view discount from all the time I've spent on this market is discount is anything above that 50%, okay? And I use this Fibonacci to identify what the 50% is. You can see my fib zone is 0.45, 0.35, and 0.2. These are key levels for me, what I look at. 0.5, anything 0.45 or above is a discount zone and gives me a gives me an idea that price might reject from that, continuing that higher time frame trend, okay? So higher time frame trend right here, smaller movements that you would see on the lower time frame, and then my entry would occur somewhere in this discount area. So that is how I first of all kind of organized the first part of my strategy, okay? There's several other entries within my strategy. So let's say we grab this high, okay? And let me give you another entry for that. So let's say we grab this high right here. Let me zoom in for you. We grab this high right here. And what are we forming now? Now we're forming these minor highs and lows, okay? So what I like to call these is minor retest, all right? So whenever I see a high and a low, all right, so we could see that this created a high and this created a low. Well, we can enter on these small little entries down here. Now, this isn't a great setup, but let's zoom in and let's say this is the higher time frame, which we're pretending it is. So we can enter on these highs and lows. So we have this, we have a retest back into the zone. I might take an entry, scalping back up to this liquidity on this area. So these are what's known as minor liquidity zones where we create a minor high and low. All right. So we have this minor high and low that broke some sort of structure, okay, that is in accordance. So following the higher time frame structure as well, okay? And so that would be another area I look for entries. So we have two areas I look for entries within the structure at a discounted range, outside of the structure where it's breaking in favor of the higher time frame. And then the third one is at the bottom of the structure, okay? Where we are looking for some sort of liquidity to be taken, okay? So we had that one where we have that structure. Now we have at the bottom structure, okay? So at the bottom of the structure, this is anything where it gives us a clear sign of what people like to say is order blocks, okay? And that's true. They are order blocks, but at the bottom of the structure right here, we have this zone with the liquidity, and then we have a strong 2 candles closing above that liquidity in favor of our trend, okay? So then we have these kind of 3 entries that are giving us an idea. The final one is looking, and if you want to be risky, this is the least likely one I would like you to organize the market, but I do it sometimes, so I'm going to put it in here. Let's say we break a high or a low, okay? So we're breaking down and we think a retest is about to come. So how do we know when a retest is about to come? We want to see 2 strong candles, which we see right here. 2 strong candles moving upwards, all right, against our higher time frame trend. And when we see these 2 strong candles, we can, these aren't even that strong, but we have another strong candle and another one. So it could be these 2 strong candles. It doesn't matter. This gives me an idea. Hey, we're probably retesting into some sort of zone, which you could see is we have this low that has been unmitigated. We have these 2 candles. So I might take a scalp from this area right here, this area down here, targeting where this gap was formed up here. Okay. Of our breakout gap. And I'll get into what that means in a few seconds, okay? In the most simplest explanation I possibly can. But we have those 4 areas, all right? This is where you would enter those trades. Okay, let me go ahead and organize this. All right, so we have those 4 areas. So now let's move to the next part, all right? So gap formation quality, retest behavior. So we have the higher time frame, clear bullish or bearish structure, higher high, higher low, or lower high, lower low. Minor high, higher time frame trend. No clear choppy trend. So I assign point values to this. I did provide this on a YouTube short a while ago. So then we have trend momentum. Okay, so this is a strong decisive candles in trend direction on the 5,000 tick or whatever your higher time frame is. Okay, weak overlapping, mixed and decisive. So when you have these strong decisive candles moving in favor of your higher time frame trend, this is going to give you your exact movement. And then we have the higher time frame structure distance. Are we far from resistance support? Are we near higher time frame resistance or support? So what that means is we've already gone through this once, okay? But what that means is if we're looking at these highs and lows that are forming, and for anyone that's coming in, I am reviewing my full strategy in detail with all the nuances. If you want to watch back from the beginning, you can. This is going to be a short stream. It's just so I can record it, but also people that want to ask questions live at the end are able to. Because I've had so many people asking what my strategy is when I've traded live. So when we have this, when I'm looking back here, okay, is this far from the higher time frame trend? From our higher time frame resistance? Let me go to the right candle. Is this far from our higher time frame resistance up here? Yes, this is far. This would not be an ideal entry most of the time, okay? If my entry was up here, is this far from this previous higher time frame resistance? No. So this would be 2 points. The other one would be 0 points. So that's how I am again organizing based off that area. So we have 4 entry areas on the higher time frame. And then we have 1 clear, concise entry, which is the best entry is near this resistance area, okay? So then what's my actual entry, okay? So I'm going to show you a few, I'll be honest, AI generated ones. Again, I don't have a lot of time, so let me see if I can pull them up for you. So these are an example. You could read down here for whoever wants to read this. These are just the examples that I've kind of prompted it to give. And I'm just going to show them very quickly. You can always look back. and it gives the explanation, kind of similar to what I've already said so far. So this is an example of my specific strategy, okay? So let's say we are in a higher time frame move. So we are moving upwards on the higher time frame. However, on the lower time frame, we're down near that support level. So support's on the bottom of that structure, okay? So this is the support. To the left that you can't see is some other, lower structure. And so this support is still in a higher time frame trend, okay? So if that's the case, we're looking for some sort of low liquidity to be grabbed with a gap, okay? And then we're looking for candles to close above that gap. Our stop loss is below those candles. Our entry is on the candle that closed above that gap. So I will give you 2 photos, very, very easy photos to review. So this is a higher time frame trend where my past 5 higher time frame candles were bullish, okay? So I went for the trade here. Where do you review? So we have this structure here, this previous structure down here. You can see that we have this small little fair value gap right here. So that's a gap where the wicks do not touch, and a gap that forms where these wicks do not touch that break this previous low, okay? My entry is on strong decisive candles breaking above that gap that did not touch, with my stop being below that structure, and then your target is a 1 to 2 or the next liquidity section above, okay? That is all the strategy is. I have a bias on the higher time frame from one of those 4 specific examples I talked to earlier that you can look back at. And then I have an exit up here, okay? Or an exit at a 1 to 2. This is an actual trade I've taken. I took this trade live on stream. So, but this is an example. You see this? We took the entry, strong decisive candles. Our higher time frame is bullish. It gives us that confirmation moving up. And I can guarantee where my higher time frame entry was near a discounted area, okay? Then we have a second trade. So this is a bearish example. Oh, wrong one. Bearish example right here. To the left, we're on a bearish trend. Our higher time frame is bearish. Our higher time frame is moving down. This grab of liquidity was inside that previous higher time frame structure, okay? So if that doesn't make sense, I will give you a better picture for, let me find it. So imagine this, my entry, so this is the previous high right here, up there, okay? My entry was in this area, and on the left side of this area was some sort of liquidity grab like this that you see right here, okay? So this is just a way cleaner setup that I took a screenshot of. So this is an example. It grabbed that liquidity inside of that structure, still with a bearish trend, so a trend that's moving down. You created that fair value gap. You could see where the wicks do not touch, right? And then we had strong decisive candles closing below. You could target the bottom liquidity of the structure or the low of that higher time frame. And then for me, I targeted that low of the lower time frame a little bit below because it usually will go a little bit below. This is my strategy to a T, identifying the areas where it is at discount or the areas when there's strong decisive candle movements to one direction. Again, I'm not going to say I'm perfect. I mess this up a lot of times, okay? So, but this is the kind of baseline on my strategy. My entry is when we form these clean gaps closing above liquidity in a discounted zone. Again, if you forgot what a discounted zone is, so I'm going to go through just one standard entry with you guys, and I'll let anyone ask any questions, okay? Okay, so let's say I'm going to find a good one for you. I'm going to bullish structure, bullish. Okay, so let's say right here, we're in a bullish structure, right? This is the previous high that is breaking. Okay, so we just changed the structure from bearish, so that downwards trend, to bullish. So we changed from bearish to bullish at this white line. Why isn't it this white line right here? It's not this white line because this is the previous area, high and low. Okay, This is the previous low that was formed. This low does not matter until we had some sort of low broken below that, okay? So if we're following this trend, we have this high, we have this low. This low was never confirmed, so we have to wait for the break above here to confirm that bullish move. This could have been, for a lot of traders, a fake out to the downside. So for a lot of traders, this might have been a fake out to the downside, again, moving down. But, you know, for this specific entry, that's not followed. Then I use my Fibonacci. Remember that 0.45 zone. We look for a discount area. Okay. So then we see our discount area and we're like, okay, where's liquidity? So we have a small little structure right here. We have this fair value gap that formed at this small little structure that pulled into my discounted zone right here. My entry is going to be, for this one, on the retest within this structure, my low down here at the discounted zone, targeting the liquidity above. Okay, maybe a little bit higher, because I always do a little bit higher. But that is the pure idea of my entry. Is it always going to form like this? This is not a clean setup. This will probably get about 18 points on my diagram I showed earlier. But this is still a valid setup because we are in a discount, a support area, okay, where we could see price potentially holding. If you look to the left over here, this is a clear area where we could potentially hold. Am I incorrect about that? No, this is an area where we could hold. The only other area we can hold over here is here. And why is this the area that I would look at the hold? Because this is the last area where we showed any sort of resistance from going up, okay? So for example, this is the last area where we broke above this high, changing the structure from bearish to bullish. Yeah. So this was the entry. This is my strategy. Everything on that is my strategy. There's nothing else that, you know, there's nothing else different about that. If you need any review, I went over everything pretty much in detail with all the nuances. The only thing to be recognized is don't be afraid. If you're seeing consolidation here, it's going to stop you out. Just make sure you're not risking enough, because you're going to have 3-4 losses in a row. Making sure you're getting out of the market for the day pretty early. Okay, if you realize that the market is not in your favor, or it's showing you some sort of market structure that is moving sideways, not up and down. For example, if I observe this chart right here, this is clean market structure. This is clean market structure. This is not clean market structure. This is hard to read. This is mildly difficult to read, okay? This is clean market structure. This is consolidation. You want to stay out of that. And how do you recognize that? If you have 2 taps, let's say you have this area, it's a tight range, and you have it where it's bounced off of it twice without you know, closing below it, that's going to be something you might want to stay out of. And what I mean by that, we have 1 bounce, we have 2 bounces, and we know we're in a trend that's moving downwards. Thank you. I appreciate it. But that is my teaching. I really hope, if anyone has any questions about any nuances, anything, how to identify, if they're confused when they're looking at the market at all, please go ahead and ask me so I can answer it for anyone. I'm going to post this whole thing. It's still going to be in a vertical format, but I'm going to post it all to YouTube so people could rewatch. And BTC, there's nothing trading right now, but I can quickly look at my strategy to see if it came on BTC. I'm on futures, so I'll give you an example. So I actually like this chart a lot, okay? I really actually like this chart a lot. So we're in a strong bearish move downwards, right? Everyone can see that. Within this chart, I have three areas I like a lot, okay? One area I like a lot is we have this moving up. We confirmed a move breaking down from this point, okay? And why is this low? Because this is the last low that formed before breaking this high, okay? So we have a low that formed here. Now what do we see? we see that we have this minor structure high and low, and this is such a great area for me to enter it. Why? Because remember, minor structures, you want to see a retest and then a failure. Okay, so we saw a retest right here, and not only did we see a retest right here, we saw a liquidity grab right here on that retest, doing the same exact strategy as I showed before. So this, in my mind, in this discounted row with this confirmation of a bearish candle, would be enough confirmation for me to take a bearish entry, potentially targeting lower. Now, the only risk of this specific trade for MBT is, one, it doesn't show my specific entry setup, but two, it doesn't show, it's not coming from a clean area of rejection. And what I mean by that is, if we look to the left over here, you know, it has a lot of confluences moving with its way. But if we look to the left, the only clean area that I see is up there, where it could potentially reject up here, anywhere within this area where it actually acts as a support zone, and we have yet to reach that. So there always is a chance, and that's why you have to be very careful, that this price could move back above and grab liquidity one more time before continuing lower. So that would be my analysis on that, and I can do it on the 15-minute, but it's the same setup on the 15-minute for me. So that's that strategy, particularly for everyone that is interested on Bitcoin. It's the same exact setup. Like, let's say if my setup was up here, why would I not enter up here? Because we're in a bearish move, but we don't have any clean high or low that really formed around this point. Everything from this point downwards is unmitigated, where it hasn't been retapped. Actually, everything from this point downwards has not had enough of a retest to make me really feel confident with entering a trade until there's some sort of confirmation. Yeah, no problem. Oh, let me go ahead and stop recording this. I only want to show the part where I explain my strategy. But I'm not stopping the streaming yet. But yeah, does anyone have any other questions? I am on futures, so I'm limited in what I can actually show. I don't do it through TradingView. I do it through Top Step. I'm showing this through Top Step. So that's that strategy entry. I'll show a few other ones because it gets a lot cleaner. I have a bunch of screenshots. Gold? Yeah, I do trade gold. So I could do gold. GC. So let's scroll out here. Okay. I'm going to do it on the 15-minute. I know that's a lot of people's priority time frame. So let's scroll out. First of all, let's organize this market. So I have a lot of issues with this chart already. Okay. So when we're scrolling out this far, we can look to the left over here. This already in my mind was grabbed. So this was mitigated. Okay, so we grabbed this area. That does not mean it can come higher, but this is now acting as a high. This is acting as a low. Okay, we are in a bearish trend on the 15-minute time frame. So if I want to enter, this is not in an area I would enter a trade yet, but if I really, really wanted to take an entry for some reason, I would look for anywhere in this discounted zone. So we're in this discounted Fibonacci. Remember, it's this value. Anything above 0.45 gives you enough for a 1 to 1.05 trade, which basically, you know, is a good risk to reward, good enough risk to reward to have a winning, have a profitable win rate. So we have that. Okay, we have that information. We're moving down. Now, if I look to the left over here, do I have a clean area where we can reject? And I would again say, not really. The only area I can see that's cleaned here, we have retested here, came back down low. It's somewhere within this area, okay? And anything else is not clean for me. So we can take two options, okay? We can observe this is where I might look for a trade to the downside using my specific strategy, somewhere up in this range at 4,300 if you're on futures. Until then, you know, maybe I'll go to the lower time frame. So let me go to the 1 minute. Until then, we might view this, okay, it's going to be bearish until that point. Now, just have an idea this is against the higher time frame. So up at this area, this would be for a sell. So if you remember what I said earlier, you don't want to trade against the higher time frame trend unless you can find an entry in the lower time frame. So our higher time frame on the very long ways is bearish, okay? But if we actually just look at these last values, so statistically speaking, this last value right here is all that really matters. These past values right here, if you're trading on the 1 minute. So if I scroll down to the 1 minute, anything below this value, we can actually track as well. And we could take small little scalps. So if we look to the left over here, again, this high has just been retested, this low. And what structure movement are we moving towards right now? We're moving bullish within the thing. So if you follow price action, let me go ahead and do it for you. So we had a bullish move, we had consolidation, we had bearish. And if we scroll in right here, we change structure, right? Change structure to the upside. And now we're moving up. Okay. So this, if you would have caught this move right here, this would have been a good entry. Stop loss below this low, targeting the liquidity above. Okay. But now you're in with all the buyers over here. So you're at this buyer over here at this point where there's a bunch of buyers and you're probably entering too late in the market. So your the likelihood of this retesting to some degree, stopping you out and then coming up higher is likely, or even the chance of this retesting and even grabbing this low that you have and coming up higher is likely because your risk to reward is now in the dumps, right? Because the highest I would see this coming without a retest is up here, or even potentially down here. So if you got the entry, at that point, you've missed this trade on the 1 minute time frame. On the 15-minute time frame, there is no trade on gold for me. The trade would have been down here. Trade is not up here. This is near a discounted zone. This is not near a discounted zone. Think of it as I'm buying percentages. If I see something on sale for 50%, I'm going to buy. If I see something on sale for 10%, I'm not going to buy, right? So if we view that percentage as a high and low in the market, and the Fibonacci is basically, for me, percentages. Like I view it as a discount, right? So if this is the previous move that we had, right? So we had some sort of low, high, we're in a bullish move. And so this is the previous low, this is the previous high. I want to look at the Fibonacci, right? Oh, where's my discount? Let me turn on the values for you guys. Let me make it actually obvious for you guys. Give me 1 second. There you go. So hopefully you can see. If I'm looking at this, if I see something, 45 is this move, this is 65% off. If I think of it that way, from this low. Oh, now this is 75% off. Now I'm at 80% off. Are you going to buy something that's 80% off? Yeah. Am I going to buy something that's 40% off on the stock market when I have to still put my stop loss at 0, at the 100% because I'm spending money, right? So if I view this as an area where I'm spending 100% of my money, and at this point, and now I'm only spending 60% of my money, and now I'm only spending 20% of my money, right? That's the best way to view the market right there. And then I can look at it from this way. Okay, well, if I'm spending, do I want to really enter this move upwards at this discounted point, right? Where if I draw this, let me go to it. I think this would be around 0.7. Yeah, around 65. I'm only getting 35% off here. No, but now if I look at it, let's zoom in even further. And once we get this confirmation, guys, this confirmation, right? We get the break of structure. We have this minor structure right here, and now we can just organize it from this area right here. We get another confirmation right there, and now look at it. Now we get a discount that we're moving bearish, and look at our discounted point with our high being here. And why does this matter more than the other one? Is because if we look over here at that low, or if we look at it this low, right, whichever low you want to look at, this forms our minor structure. This breaks it, and now our discount is around, I don't know, 75% off. So I get on off that 75%, or even this 55% off, right? I put my stop at 55% off, and now we're also taking a trade that's moving in the same way of our higher time frame, right? Our higher time frame is moving higher, lower, higher, lower, higher, lower, right? So now we're in a trade that's moving the same direction of our higher time frame. We could target, below that liquidity, a 1 to 2, whatever you want from that point. And it still wouldn't stop you out on that retest. Comes down lower, you target maybe the higher time frame structure that from this left comes down lower. And then, you at that point, let's say we have that entry on that small little structural grab right here that gave us confirmation because we broke below a low, right? Or we broke below that low. And we target down here, we get a 1 to 5 trade. We can get up to a 1 to 8 trade. Now, you're never going to get that. Let's be honest, people get scared out at around a 1 to 2. So that's why I just say be safe, max a 1 to 3, and then you could trail down if you really want to. Does that make sense for everyone? Okay, good. And that does require practice. You're not going to get it right probably within the first few months of doing it, but you can always watch back this, either the stream or the video that I'm going to upload. That's going to be the exact same thing as my stream. You can always watch back. This is how I frame the market. This is how I enter on the market. This is just repetition. I make mistakes. I get angry. I get emotional. Sometimes you're going to have those days. You're going to make a lot of mistakes. You're going to have a day where it destroys you, right? But as long as you can recognize when you're having those bad days and shut it down early, you will be profitable. No matter if I'm misreading this market. Sometimes you're going to get misreads. You're going to misread the market, but you're going to win the trade. And by misreading, that doesn't necessarily mean that, that just means you're not following your strategy or your framework going into it. That's the best way to phrase it. But yes, that is my, that's kind of my outline. This is all free. Yeah, thank you. I appreciate it. Hopefully anyone that watches afterwards, watches concurrently, watches at any point, this is going to be probably one of the best. There's a few good sources out there. This is probably going to be one of the best free resources you get. I won't ever charge anything. This is more of a hobby for me. I don't foresee charging anything, at least. But yes, so that's how I frame the market, especially market structure, right? That is the best way to frame market structure, in my personal opinion. If I have, let me give you another reason. This is hard market structure to read right here, because technically this grabs into the high, but it doesn't come into it enough. So that's why when I see something like this and I see it hesitating, I wait for a confirmation. So my confirmation would be down here. We got a minor retest up here. You can look at the minor retest right there, and then you have the closure, another minor retest closure, and then now we have that confirmation that we're moving down. But I actually try to wait for this long confirmation to move down before I actually take that entry. Because this could do really anything, because technically this is the previous structure within this minor retest right here. So if we zoom in, this is our high and low right here. This is our next high and low down here, right? But we never confirmed this low because we never broke above that high. And that's how I confirm a low. So therefore, this needs to break. So price needs to break this to continue that downwards trend, which it did. And it broke it. And then we can look for an entry. Okay, same exact thing. Now we have a minor structure. We can look for the same exact entry down here. We broke it. And then we get my actual setup right here, right after it on the small retest that I just showed you before. All of this that occurred before is useless to me. You know, I might be able to look at it the same way over here, but all of this is useless to me. And I might even at a certain point on this strong candle, take a bullish trade coming back into this previous price action if I really feel it that day. But I would not recommend that for anyone else. I do have to leave, so if there's any last questions before I do leave, you can always watch back my explanation to get a lot more information. You don't have to do my exact same market, but at least use my higher time frame guidance in order to enter on your own strategy, whatever that is, okay? So whatever your own strategy is, you can use my higher time frame market structure, organization plan, whatever you want to call it, to enter your lower time frame strategy. If you want to use my lower time frame strategy, I completely understand. It's very easy to enter on, but it can be very confusing if you're new. So just be very aware of that. Does anyone have any additional questions? I will be live tomorrow, trading live tomorrow. I will be live, I think, at 12:30 p.m. Eastern time. So whatever time frame that is for you. If you guys have any questions then, or if you have any questions now, you can go ahead and ask them. If you do want to support me free, you do get $10 to $200 for free when you join Whatnot, which is, I'm not actually advertised or supported by them. It's just the only app I buy off of, to be honest. It's one of the only apps I buy off of right now. And if you want proof of that, I'll show you a bunch of proof. They do giveaways and stuff like that. So, but if anyone has any questions, and just proof for that, this is all the stuff I bought off them. Oh, I've won a bunch of giveaways. I bought a bunch of stuff off of them, but that's why I advertise it, because it gives me free money so I can spend more money on that app. But you guys have a great day. Please, if you have any questions, you can leave it in the comments below. That's the only promotion I'll ever do. But yeah. Have a great day.